exactly what it is that we do, because a lot of people out there have never heard of us, and they're saying, what the heck is this? How can these people offer free consulting and help me, and there's no charge to me? So we are a nonprofit organization, and we are funded in part by the Small Business Administration and by county, state, city governments, and that's what keeps us in business. We want to have impact for those cities and states. We assist the businesses, either startup people or people that are actually in business, with every aspect of their business every day. We're kind of like the outsider looking into your business. So maybe you need some help with marketing. Maybe we need some help with finding capital, like Ed is an expert in. Maybe we need to have a business plan. Maybe we'd like to do government contracting. We have all of those folks that can assist you. And like we said, there is no charge for our services. It's really hard to believe, but we do offer these professionals. And again, there's no charge for our services. We are located at the University of North Florida, our main office, and they're actually the people that help with the grants. And then again, it gives us instant credibility to those businesses that wonder what the heck we're doing out there. But today I would like to introduce Ed Dwyer, and it's really my pleasure. Ed joined the SBDC in January of 2021 as a capital access consultant. And in this role, he assists business owners and pre-venture clients in finding the capital for their business. He often assists the clients with business plans, projections, and even finding the right lender. A lot of times people come to us and they don't know exactly where to go, or maybe they've told us that they've been turned down by a lender, but Ed can help you steer you in the right direction. And his experience includes working as a senior VP with a top 5 national bank for over 30 years. He doesn't look that old, does he? Well, at the bank, he had several different positions, but most notably, Ed worked in the commercial lending department as a commercial lender. And he has also been a multi-state regional manager and an on-site CEO for failed bank acquisitions. If that doesn't keep him busy enough, he's also a self-employed leadership development trainer. Ed lives in St. Augustine, and in his spare time, he volunteers at the St. John's Chamber of Commerce, and he is chair of the Small Business South Beaches Council. He's on the boards of Make-A-Wish of Northeast Florida, the St. Francis Housing Homeless Center, and on the faculty of Executive Banking School for Consumer Bankers. So, with no further ado, Ed, take it away.
All right, Marge, thank you so much. Thank you, Ali. It's wonderful to be here with you all today. Thanks for joining. Hopefully one day we'll get back into the business of doing these things in person and actually can see you and get to know all of you after this program. But thank you, and thank you to those who may be watching this on recording, because it really is a great story that we have to tell here at the SBDC. And as Marge just said, this notion we have all these capabilities to help small business and that there's no cost. Just over the weekend, I met a business owner in St. Augustine and told her what I did. And she says, "You mean I can sign up?" Yes. "And what does it cost?" "It doesn't cost anything." She goes, "What's the catch?" There's no catch. So as Marge says, we are here to help you all. And it's wonderful to know through the poll that it's about 1/3 entrepreneur looking to start a business and 2/3 existing business. Fabulous, because all that I talk about applies to both of you. And so let's get rolling. What do you say? So let's move on to the next slide. So you would think I might want to dive right into capital access, but I don't want to, because there really is a sequence that I have found in these 4 months that I've been with the SBDC that way too many business owners and entrepreneurs are skipping all over the place in terms of the steps, right? I see that there's want to start a new business, but then I'll see they've already set up an LLC, or they've already set up this, or they've set up that. And then they're coming around and they're trying to figure out what to do next. In reality, the first step in the entire process is to write a plan, right? And we will help you with that in terms of, we've got some great templates to help you kind of create a sense of what is in that. How do you go about creating a business plan? And we'll also provide some templates around financial projections. Having a plan is paramount for, I don't care where you are in the life cycle. If you're an entrepreneur and you're trying to start a business, you need a plan. If you're a small business owner and you've been in business just for a little while, you needed a plan, hopefully to have started. You need a plan that you're constantly updating, a strategic plan. They're all the same, but at some point, you know, every organization has one. Marge mentioned I'm on a couple of nonprofits in town, and we are constantly updating the plan for the nonprofit. How does that change over time? COVID caused such a dramatic change. It's a change agent for all of us, and so you have to constantly come back to your plan and adjust it. Look at what changed and how are we going to actually be better after all this unbelievable disruption from where you were before. It's an objective look for you to be able to first validate to yourself and to your team, your employees. If you have employees, or even if it's you're self-employed, maybe to convince your spouse that you're on the right path, that you have a great idea. You need a plan. You think about it, you go on vacation and you typically have a plan, right? Oh, we got a plan. We know where we're going to leave. We know where we're going to land. We know where we're going to stay. We know what we're going to do. Some people really like to build out a plan for vacation. I like to not have a plan, but yet you go to start a business and some people say, well, this is what I want to do. They can articulate it, but they don't have it written down. And so it's a communication tool for when you're seeking capital, which we'll get into further. It's a communication tool for your banker so that they understand exactly what you're trying to do. And it's a communication tool to your employees again. It's your roadmap. It's a roadmap for all that you do. It's a really critical step. And in it, the most critical thing is that first one, your mission and purpose. What are you all about? Describe why you exist, why you're passionate about that, be able to go to a chamber event and quickly articulate what your mission is and have it be exciting and compelling and something that people want to say, I want to learn more about that. What's your value proposition? We're seeing so many people pouring into the market to start a business, which is great, but you have to be able to articulate what is your value proposition that may be different than your competition or whatever space you're trying to get in. What is your value proposition? What is your background that makes you unique and your company unique? And it provides a financial baseline and a projection for the future. You know, your balance sheet, how strong is your balance sheet, which goes right to the topic about capital. And so that to me is the most important thing in the midst of all this. We're not just going to talk about loans. It's really important to think about the capital. So just to give you an image of what this business plan should entail is all these pieces. And I'm not going to go into this now because this is a presentation in its own regard. But I would even encourage you to first do this and think about all these different topics and components of a plan, you know, before you even set up your corporate entity, because you might want to go to your attorney and say, here's my plan. This is what I want to do. What do you think is the best corporate entity to set up? Not the other way around, right? I'm finding it time and time again, people have already set things up and then they think about building a plan. So if it's not too late, do your plan, then go visit an attorney and get things going on the right path by having a great plan. The other most critical thing for any business, again, a startup or a mature business and anywhere in between, you must have a solid professional advisory group around you. A great banker that you know well, a CPA that you know well, and an attorney that you know well. It is so critical to have at least those three, even add in business insurance and so forth. When you have those three legs of a stool supporting you, I promise your business is going to have a stronger foundation. Marge and I have seen it time and time again throughout this pandemic and all the SBA funding that's come down around COVID. Those people, they had a solid relationship with their banker, CPA, and attorney. 99% of them, if they qualified, got approved by the SBA through their bank for PPP or for EIDL because they were well supported. Over the weekend, the restaurant revitalization portal opened on Monday this week. On Sunday, I'm getting all these frantic people calling me because they didn't file their 2020 taxes yet. And they're wondering what financial information am I going to use? And so yes, of course, the CPA, you know, the IRS extended the filing to May 15th, but that doesn't mean you have to wait. You know, you want to get your tax returns done in an orderly and timely fashion. You want your financial statements done by your CPA in an orderly and timely fashion because you as the business owner, you need to know your numbers. And if you're getting numbers 4 months after the end of a period, you don't know your numbers that well, I promise you. And as a banker, I would constantly interview people, my clients, to make sure they understood their numbers. They would send me financial statements. And I would ask, so what's your gross margin these days? And how is that looking? They think, oh, I don't know. You need to know your numbers. And so this organization here, the Small Business Resource Network, is unique to Northeast Florida. And the SBDC fully supports and is a partner with the SBRN. And so if you don't have one of those three, go to this website, and they're vetted professionals, people that we know and trust that have proven their ability to be good representatives of small business. And so please check out SPRN, because that's the first stop after you've done your plan. Then, all of this being said, you've built your plan, you've got some projections, then you can say, okay, how much capital do I need? And when I say capital in this word of capital, I'm talking about equity in the business, not necessarily talking about loans yet. How much equity am I going to need for this business to succeed? I mentioned the foundation of the three professionals. The foundation of any successful business is sufficient capital, money into the business. And so by doing the plan, by doing the financial projections, we'll help you through this process of really identifying all of your startup costs. And when it says capital requirements, those are fixed assets, right? If you're opening a restaurant, making sure that, and Marge owned a bunch of restaurants once upon a time, and she's great. She knows every little nuance about what a restaurant needs. And sometimes people go, I didn't know it was going to be that much, or I didn't realize I needed that. You have to nail down your capital requirements, your fixed asset requirements. And then also what people really don't understand is the working capital requirements. What does it take to get a company off the ground in the beginning, where you're having to spend on materials, you're having to spend on food costs perhaps, or inventory for a business, and that there's a lag in terms of when revenue turns into cash. And people don't realize how much working capital they burn. That's the liquidity of your business, and it surprises people. And again, if you're undercapitalized, you can get really caught fast in a liquidity crunch. And that's why we always hear that so many businesses don't make it. It's all kinds of statistics, but that first year is the most critical year. If you can make it through the first year and ride out and not get caught in a working capital box, then you have a better chance. But it all is about having the right capital in the beginning. And the cash flow projection. So we work with you there too. So we look at what all the different assumptions you use around how your cash flow is going to exist into the future. What's the assumption for your revenues, making sure all of your expenses are taken into account, and finding where that break-even point is. Where's that finally that tipping point? We know you're going to lose money typically in the beginning for most businesses, but there is a point where you're getting enough revenue in, you're getting enough clientele to get to that point where you're going to be profitable. And it allows, all this process allows you to do what if scenarios. Well, what if COVID comes back, right? I hate it that I kind of feel like everybody thinks, whew, wow, we're out of the woods on that one. Well, we don't know. And so what if scenarios, what if something happens? How am I going to make it through a shock? We're in Northeast Florida. It's hurricane climate here, right? We're coming in June, the start of hurricanes. And Marge tells me horrific stories about what happened with some of the major hurricanes we've had here. And the SBA is here for you for that as well. So you have to be nimble. You have to make sure, you know, that you've built out these plans. And if there's one thing on the topic of capital, everybody, there's a line that I had that I said probably a million times as a banker. And for 27 years, I worked for US Bank. And the line is, would you rather, and I say this to a business owner that maybe is kind of struggling, they can't figure out why they can't get to that tipping point. They kind of seem to get to a point where they just hit the wall. And I say, would you rather own 70% of something that is amazingly successful and pushes you through that barrier, or do you always want to be the 100% owner of something that always struggles? Well, I would suggest that the 70% of something that's successful is always better than 100% of something that struggles. And so think about, before you even come to us, before you ever think about going to a bank, see what you can do to bulk up the amount of equity into the business. Maybe you say, man, I don't want to give away 20, 30% of my business. Think about Shark Tank, right? That's what all those people are doing. They need capital. They have a great idea, but they need somebody to come into the business with them. And so once you have your plan, you've got that all together, you're really enthusiastic, you believe in your projections, you need to be able to go to somebody and say, but I need about $100,000. I mean, to really make this right, to pay for the startup capital, to pay for the working capital, I'm going to need 100 grand. And it's all about networking, you guys. Everybody calls in, asks me and Marge and all the other consultants, what kind of grant money is out there for a startup? Well, unfortunately, there's not a lot. You know, the grant money that came through the SBDs or the SBA of late has been to help with the impact of the pandemic. You know, it's more emergency funding. But for straight up startups, there are some programs sometimes within regions. I know in Jacksonville there was some small business grant money funded locally within a certain locale. So it's important for you to really research that in your backyard. But you know, one of the frustrations I always had as a banker is how tough it is for small businesses to get capital. You know, you always talk about friends and family, and that can always not be great either, right? There's nothing worse than when a family member invests in another family member's business and it doesn't go well. It tends to not do well for the family. But sometimes that's what it's got to take. But even better, I think it's important to join a chamber of commerce, be out there in the community, pitching what it is you do back to your mission statement and purpose, and get somebody to say, wow, that's really exciting. And then to say, you interested in being a partner? Because the money's out there. I just did a program in Ponte Vedra last week, and it's unbelievable the amount of liquidity that's out there. And I always think there's an opportunity to match up the entrepreneur who's trying to get a business with people who have capital that they might want to put into a business, just like Shark Tank, right? So a lot around the capital, right? It's so important, everybody, before you even think about debt, because you need the right amount of capital to then ask for the right amount of debt. So I'm trying to turn the time. All right, so here's just, I'm going to do this briefly, but there are these 5 C's of capital. We do talk about it at the bank. We do talk about it from the standpoint of people to understand what it takes to be able to start a business and to have the longevity of a business. And it's these 5 C's. So your credit score, your personal credit score is paramount, right? Particularly when you start up as a small business. A lot of banks that may do financing for startups or early rising firms, the first thing they do is look at the credit score of the owner. Like if you're looking for a $25,000 small business loan through a bank, they're really the first thing they're gonna do is run the application as if you personally applied for it, because that's who they're banking on. They're looking at you. They're gonna pull your credit score. They're gonna look at what kind of cash flow do you have. That's why, sidebar, I always love to hear when people say, I wanna start up a business. I'm currently full-time employed somewhere, and I'm going to stay full-time employed at that business while I work on this after hours, until I can kind of get it to the point where I can hop off of the full-time job into the business. I like to hear that, because I worry about the people that say, no, I had to quit my job because I want to get this business going here, but it never goes as quickly as they hope. And then their credit score suffers because maybe they've lacked cash flow and they start not being able to pay their mortgage. Slippery slope. You want to always secure your pristine credit score. Character, management ability of the owner. There's credit history again, but there's all aspects about character. Capacity and collateral. So capacity meaning your ability to service debt if you have debt. What is your debt to income? What is your debt to equity? And it's making sure you have the capacity to repay, and that sometimes if you're in a business that has fixed assets, you have collateral to offer. What are the conditions? What's the general economic environment, the industry that you're in, the geography that you're in? These are all considerations for capital. Right now, the economy is booming back after the shutdowns. This part of the country is absolutely, literally smoking hot in terms of housing and so many other things. Almost too much, right? A lot of businesses are having a real problem finding people to work. That's why we see so many restaurants closed on certain days of the week, because they literally can't get the staffing. But there's the last one again, capitalization. So if I were to put these in order, everybody, maybe in your own head for a second, what do you think number 1 and number 2 would be in your own head? And I'm going to tell you, absolutely, you know what number 1 was to me? And I had a chief credit officer who drilled this into our heads. It's number 2. It's character. Bank good people, and good people will pay you back. Sounds simple, but I tell you what, I learned that was, as a lender, it was more about the gut than it was about the science and the numbers. I remember I did this one time. I had a deal that just every part of it was good. It cash flowed, everything fit the credit policy, but just something bugged me about the owners. I couldn't get comfortable with them. There was something that was in my gut that was just saying, this isn't there's something not right here. I don't feel like they're telling me the whole story. And in this case, I was a younger banker and I did it anyway. I even brought out somebody from the bank to meet the people and say, maybe I'm wrong. There's something I'm just picking up on the wrong vibes. And they said, no, I think this looks good. That deal went south so fast. It did not turn out well. Character is absolutely number two, by the way, there's this thing called KYC, know your customer in banking. And I had circumstances when I was the chief risk officer at US Bank for the consumer and community bank that we would have some commercial lenders out there that would be all the way through dang near closing a loan for a client, for a borrower or a prospect. And then somebody behind the scenes that was doing anti-money laundering, AML stuff, just does a simple screen on the owners before we onboard them as a new customer. Come to find out that one of the owners was jailed for embezzlement a dozen years ago. If the loan officer would have simply done a Google search on this person, they would have found it and found out that he had actually lied on his application, that he had not been convicted. And we had to pull the plug on the thing at the last minute. And I was just, thinking, whew, man, we dodged the bullet on that one. Character. And number two is capitalization. Back to my other point. It doesn't matter if you have collateral, if you don't have capital. A bank will never lend you money simply because you have collateral. They want to know there's cash flow, which is the top one, cash flow, and capacity to repay the debt. So character, capital, cash flow. Those are the three critical ones that we all need to see. So Marge touched on this, but I just want to have you see this. This is the path that we would love for all of you. Many of you may already be SBDC clients. If you're not, we'll talk to you more about how to do that, how to become a client. But this is how the process will work if you're not, or even if you've been a client with us, maybe this will have you think about some things that you haven't utilized us for. And I'm not going to read every box, but the request for consulting. It's simply a link. We send it to you. You fill it out. You lay out all of your company or prospective company concepts and all the data, and then you go about saying, what exactly do I need help with? So you request for it. It's all about the business plan. It's all about making sure the first step that any of the consultants will do is to make sure your plan is good and well thought out. We'll kind of poke holes on it, stress test it, make sure you haven't missed something. And then get into the whole notion about what is the funding, step two, and then your strategy. If there is a need for financing and we agree that you've got good financials, it looks like everything, we will help you think through between 3 and 4. What's the strategy? And then we'll help you actually put forth the best pitch to a bank or whatever. I'll get into other types of capital and loans that you can go to get. And then there's funder relations. And Marge has shown this to me. She's been with the SBDC for over 10 years. She's got a lot of great contacts out in the community where the door swings both ways. Like we may have someone come in, we help them get to the point where the plan we think is really good. We really think it's a viable opportunity. Then we go ahead and reach out to some of the banks through the SBRN. We know certain people who are really good at SBA lending or whatnot. And we'll say, what do you think? Heck yeah, this looks great. I'd love to meet the person. Everybody's happy. You got an SBRN partner, you've got a new business, you're matching them up, and we're helping each other get you the loan. Huge value proposition we have. And then post loan, when you get the loan, you get the business going, or you bought a business. I know we've done that of late, where you help people put their plan together to buy an existing business and get funding through the SBA. Is that we continue on with you. We continue on helping you make sure that that purchase or that new entity is successful. We'll help you continue to review your financial statements. It's what I did for a banker my entire life, was understand how to review people's financial statements. So before we get into types and sources of financing, let me just pause here for a second. Any questions from the audience that you could put into the question line?
I am not seeing any questions yet, Ed.
All right. So switching gears then, now we'll get into the types of sources of financing. So there are sources for commercial lending, certainly the banks and credit unions. Credit unions, I got to tell you, there's some great credit unions in town here in Northeast Florida, and they're doing business lending. So they are an option for you. There are finance companies out there that are non-banks, but they do have the ability to lend to small business. And probably a new one on the list for a lot of people, fintech lenders. It stands for financial technology lenders. Fintechs are exploding around the country and around the world. As a banker, I served on a committee at the Consumer Bankers Association in DC, and they're worried. The banks are worried because these fintech companies, they aren't banks, but they can lend money. They can't accept deposits, so they have funding coming from some source of capital that they turn around and allocate. I'll tell you more about that. It's a very interesting development and one that you all need to know about. And then there are, of course, the federal sources. We'll get into the SBA programs around 7A, 504, and the disaster loans. But also be aware that there are some sources of funds here in Florida. I want to put it out there for the Florida First Capital is the Certified Development Corporation throughout Florida, and there's a representative right here in Northeast Florida in Jacksonville, Kristen Tackett. So first, just keep this information in front of you, because this Rebuild Florida Business Loan Fund is interesting in that it is funded through the state of Florida, and it looks like all the typical SBA loans, but it has one caveat. Is you have to show evidence that credit is not available elsewhere for whatever reason. You can't get a loan from a bank. You can't get a loan from the SBA. Here's Florida with a Rebuild Florida Business Loan Fund. So it's something to look into. I'm not going to dig too deep. And then there's a microfinance guarantee program, which is between $50,000 and $250,000, where the state provides a 50% guarantee to the lender. So you still work with a lender, but I won't get into those items too much. So plenty of sources, though, is the point for financing in the marketplace right now. Banks are hungry to lend. I always hear some people say, oh, the banks don't want to lend anymore. Yes, they do. Right now, the banks have the lowest loan to deposit ratio in the history of banking, right? In terms of all the deposits that are in the bank needs to deploy those deposit dollars out into the community to form loans. Banks are looking to lend money. If you have a viable project and you have viable capital and everything looks great, I promise you, you'll have a line at your door of people who want to finance you. Maybe surprised, it's the truth. Other sources of financing, asset-based lending and factoring. Again, these are for kind of fixed asset intensive businesses. Think tool shop, thinking, manufacturing facility. Again, kind of light on the capital. So these are lenders. They're lenders right here in the community who I've met and know that can do what a bank can't do in its banking organization with good solid accounts receivable and inventory, and can lend against that at a very high ratio. So if that rings a bell for anybody, reach out and I'll tell you more. Venture capital, this is, again, there are organizations that are looking to invest in businesses, excuse me, and so it's just another important aspect. And this fintech lender item, again, is just really important. So the way the fintech works, by the way, is you can go out right to their website and apply online. So it's all digital. And what's interesting to me is the SBA actually authorizes and endorses a handful of fintech companies. And that's Square, there's Cabbage, PayPal, Intuit, QuickBook Capital. So if you have QuickBooks, QuickBook Capital actually can offer a certain amount of small business financing. There's a Veem, VEM, and Biz2 Credit. And I'll give you an example of a friend of mine who owns a bar restaurant that uses Square. And she said it was really pretty remarkable. After about 3 years of being in business, they get an email from Square, who's doing their point of service, point of sales, all the different incoming accounts and so forth and transactions, and says you are eligible for $10,000 in financing. It's kind of like your bank might do, where you get an auto offer to get a credit card. They pre-approve you. So we've seen this now where Square is offering, and in their case, they didn't need the money for cash flow purposes, but they wanted to make some improvements. So they said, sure. And they saw the terms, they were comfortable with the terms, they got the $10,000, they were able to make the improvements into their restaurant bar right away. And then the terms were that Square would just deduct the monthly payments from the proceeds coming in from their business. And they paid it off over like a 2-year period. She said it was wonderful. And so fintech lenders is a whole new area of opportunity. And even through the whole pandemic, they were a big player in terms of helping businesses get PPP and other types of loans. So let me delve further now into some of the SBA programs, because for many of you, perhaps that's why you're on here. They offer all the different things that you see here, and just a glance at the kind of the classic, really two that you will find out in the marketplace is the 7A and the 504. 7A is more unique in that you can use it for a lot of different things, including working capital. You can refinance current debt, purchase FF&E, and other things for your business. Whereas the 504 is really much around just fixed assets, real estate, long-term equipment. And then the microloans is something that's interesting. They're out there. It requires a bank still, but there are some ability to do this. But Marge and I have found that there hasn't been a ton of activity around that, and it's something that we'll continue to try to work through. But know that these programs all go through your local lender. And something else that's really critical about this is just a side-by-side, more information for you about what's the difference between the two SBA programs. And you can see that again, the 7A is more, kind of broad in terms of what you can use the proceeds for. But the way this works is the bank makes the entire loan and the SBA guarantees the debt. So if for whatever reason the customer fails, business fails, the bank cannot recoup all the funds to be able to pay back the debt, the SBA comes in, pays the bank back up to some 95% of the actual transaction. And so some banks like that. And so must know though that when you go to the SBRN again, you'll find who some of the local 7A experts are. Not every bank does 7A. They have to go to the SBA, they have to get qualified. And so it is an approval process. So the SBRN will help you find those, and will help you know too who the 7A lenders are in town. The 504, on the other hand, that is not where there's any guarantee. This is a circumstance where the bank really controls the entire process. In a classic case of a 504 is when a business is leasing space and they're doing really well, they're busting at the seams, they need to move, and instead of leasing a bigger space, they want to own their own building. Totally logical kind of progression of a business. I have a few circumstances going on right now with some live clients. And so the 504 is great because oftentimes the business owners can afford the payment because it may be not all that much greater to pay a mortgage than other things as their current lease, but they don't have the downstroke. They don't have the liquidity. And so here you can see the down payment is only 10% in most cases. And you then have the bank does 50% of the loan, and the SBA, through the certified development company I mentioned earlier, they actually go out and sell debentures for the other 40%. So I always loved this program as a banker. I used it a lot. And the reason being is you get a great interest rate, kind of a mixture of rates, because the bank is going to offer you a certain amount of interest scenarios for, say, like a 5-year term with a 20-year amortization. But the SBA will offer amortizations from 10 to 20 to 25 years. So it really spreads it out and makes the payments more affordable. And current rates right now that I got directly from the CDC, 10-year fixed 2.70, 20-year 302, 25 308. Unbelievable. Banks can't lend money that long and that low. So it's an incredible opportunity, one that you should definitely take a look at if you're in any of the position to want to buy a building or buy some heavy equipment of some form or fashion. Okay, and then the SBA, I did want to say this, that there's a temporary fee elimination on the 504 and on the 7A. Okay, so typically there's a 0.5% third-party lender participation fee on loans. That's waived. And normally the CDC, which is really kind of tied to the SBA, had a 1.5% certified SDC processing fee for 1.5%. That is currently waived. And so they're doing that through September 30th of 21. Okay, so this isn't going to be waived forever, there is a window between now and May and the end of September. This is a big deal. Again, Marge and I saw an individual who purchased a business, got a 7A program, and saved a lot of money not having to pay the fee to the bank or to the SBA. All right, so questions at all? Let me stop there too. 7A, 504, SBA lending, any questions there?
Nope, none yet. I think it might be information overload, which is totally fine.
Well, that's why they'll just need to call and talk to more of it. So SBA disaster assistance, not a whole lot in this, but I do want to just make note that, again, being in a hurricane area, that the SBA is there if and when, God bless, we don't have a circumstance anytime soon similar to Irma and so forth. But there are funds that become available during storms. And so those are the first couple items. We're all pretty informed about the economic injury disaster funds. I purposely didn't talk a lot and won't talk a lot today about the COVID stimulus funding. Only say that the PPP, the Paycheck Protection Program, is about to sunset here at the end of the month of May. A lot of banks have already pulled the program. I'm getting some calls right now where people are kind of a panic for whatever reason. They're just not learning about PPP and their bank isn't offering it anymore. So there again, you might look at some of the fintech companies, because I know they are, have seen some activity there of late. But that's sunsetting. And then the EIDL loan, that is available through the end of the year, 2021. And so that could be, but most people, again, if you have the right banker, the right CPA, and the right attorney, you knew about this a long time ago and have already, if eligible, were already funded and already secured either of these programs. So it's just another validation to that point. And then military is always something that we want to help, and the SBA does as well. And so through this program, we've seen that it's not just loan assistance, but it is really just grants, right? Money that gets dropped in your lap. So in the last couple of weeks, there's been 2 new big funds: Shuttered Venue Operators Grant for anybody that was in the business of live music or a theater or anything of that realm. There is a portal open right now for you to apply. And then just on Monday, there was a brand new portal open through the SBA. These are both direct with the SBA. You don't go through a bank. This Restaurant Revitalization Fund. And that, real quick, is if you're a restaurant or a caterer or anybody in the food business or bar business or food truck, 2019 revenue in your tax return minus 2020 revenue equals whatever, minus your PPP loans you might have gotten. And if there is still room there, there's still a positive number, you submit that and you're eligible for that. And only strings attached to it is you have to use it for eligible expenses between now, actually, there's a look back into 2020, into March of 23. So you literally have 2+ years, pretty 3 in total, to spend the money on your business for eligible expenses. So if you didn't know about that, please reach out to us right away, because the portal is still open. In normal times, the SBA does have some interesting things around R&D grants, exporting. Marge mentioned exporting. We have exporting professionals on staff at SBDC as consultants to help you export. Reach out to us. We'll find, get you matched up with the right person. Same with government contracting, Marge says. So there's a lot of different things that are out there that the SBA wants to help with. And these award programs are something that we can get into another time. And so, when you think about all the different grants and so forth and all the different loans, there really is the opportunity for you to get a lot of different loans in different ways. But the best thing to do is to start with us at the SBDC. And it is a no-cost offering here. For me, I was a banker for all those years. I decided to step away feeling like there's other things to do in life than being a banker. And then I'm really glad I did that. And so I was involved, as Marge mentioned earlier, with the St. Johns County Chamber of Commerce, where I chair their Small Business Council, and was putting together some programming for the purposes of demonstrating all the resources that exist here in Northeast Florida for small businesses. And that's where I met Marge. And a long story short, I ended up coming aboard as a consultant. And it's just wonderful to be able to kind of bring my career full circle to help any and all individuals and businesses kind of achieve their dream of owning a business and being a sole proprietor, or owning a business outright and having employees. It's a challenging ride. It takes a lot of grit. It takes a lot of endurance to do it. But we are a resource to help you at every step of the way, and to build your confidence to make it happen. And so the way that you do that is, there's a link that you go in and you register, you describe your business, you lay out, all the particulars, which then allows you also to enter into a confidentiality agreement with us, so that you can be comfortable that anything you share with us stays with us. I tell you, as a banker, I will forever have the mentality, whatever someone tells me about their business, it stays with me. You don't talk about it. If you want to end your career as a banker, have loose lips and you were done, because that is an absolute killer. And so that's the way we are. We hold things confident to help you. And as you think about this, we really can help you all the way from the beginning of a business all the way to the sale of a business. That's something else that I think is really important in strategic planning. Is maybe you're sitting here as one of those existing business owners, and perhaps you're at a point in your life where you're wondering, I wonder what my exit strategy could be and should be. Do I want to sell the business to someone who's already working for me? And should I start the process? And we can talk with you about how that works, to kind of really coach and have an employee grow into becoming the future owner of your business. Or you maybe want to sell it outright, which I'm talking to a few folks about as well. There really wasn't a successor in the business, but they like to sell the business because they have a good clientele. And so there's a whole process you go through in terms of finding out what the business is worth based upon the cash flows, and also looking at helping identify, maybe you want a business broker, we can align with someone in SBRN. So it really is endless in terms of what we can do for you. And for someone like me, who's had a background in banking my entire career, we get to bring that to you at no cost. So with that, maybe anybody, some final questions or something that you'd like me to touch further on that we've addressed so far, just hit that question button and submit.
We actually do have a question. One of the questions is, are there loans available for small business to rent a building if it is no available for purchase?
Oh, sure. Yeah, for a construction of a new building, absolutely.
Yes, and then the follow-up question is, we are interested in the grants for the arts. We own a dance school. We'd love more information about it. Absolutely.
Great. If there's a way that you can send information through to us, my email address is e.dwyer@unf.edu. So it's just e.dwyer, D-W-Y-E-R. Happy to walk that through with you and see if you're eligible. But it's certainly a dance studio should fit that profile. And it's currently open right now. And back to the point about if you can't find an existing building, by all means, to do a construction loan, buy the lot, construct a building. The banks would be the first place to go, because they would be in the business to be able to do a construction loan, fund the lot plus the construction. And I'll tell you what, it's actually really beneficial to use a bank for construction financing, because the bank is going to make darn sure that every draw that the contractor puts throughout the process, that work that he or she's asking to be funded for was actually done. Construction lending is one of the most high risk lending products banks have, because a project can go sideways really fast, right? You've used 100% of your construction loan, building's only 80% completed, and we got a problem, right? So it's actually useful to have a bank, because they're protecting themselves and they're protecting you to make sure that the building gets constructed properly. So what happens is the bank will fund the purchase of the land and the construction costs. You will have to put in a certain amount, at least 10%, but a 504 could be a way to do this. The bank does the construction all the way up to the end, and then so the construction loan ends, the building's all done, you get your occupancy certificate, then that loan turns over to perhaps look at the SBA 504, for instance, if it's owner occupied. You can't use 504 for investor, it has to be owner occupied real estate. Then they go through the process of approving the end loan, the fixed term loan, back to the 50-40-10, where the bank does the 50%, the SBA issues the 40% debenture. So boom, you've got a construction process, and then you got an end loan all through the same process. So it's very simple.
Ed, let me interrupt you there. I think what they were asking in the first one was available for small business to rent a building if it's not available for purchase.
Oh, it was the other way around. I got you. Well, if you're interested in building a building, you now know. But so you know, I mean, rent payments themselves, I mean, that's obviously a cost of doing business. So there wouldn't be grant money per se just to pay rent. That would be part of your overall expenses, you know, including utilities and other things. So I guess the blunt answer is no, there's not direct funds available for rent per se. But you know, we would look at the whole picture and see exactly what is needed and what it would take to get into a new rented space.
Okay, awesome. Thank you. Another quick question here, and sorry, Brianna, I interrupted you there. Somebody is asking, we help prepare your business plan. And Ed, I don't know if you want to dive into that a little bit, but we don't write business plans for people, but we certainly help you through the process of getting it completed.
It's a great distinction, because there are people out there that will write a plan for you and they'll charge you. I had a lady recently where the guy charged her $1,500 to do her plan, someone a lot more than that. And they literally will take all the data that you give them, and they'll write it up for you, and then go back and forth and make sure that everything's right. You're typically, that's for a for-profit business that does that. And so this is a good question, just to draw the distinction. We won't write the plan for you, but we will absolutely provide you the tools to write a plan. We'll also share some other tools that are available in terms of some sample plans that maybe you could find something that is you know, comparable to your business. So you take the first shot at it, and then we continue to meet with you to refine it, to make sure you're not missing something, to challenge you on your assumptions, so on and so on, until the point where we say, this is great. You know, yeah, you like it, we like it. So it's a partnership. But you, the business owner, you, the entrepreneur, got to write your plan, and we will help support you in that.
Awesome, thank you. And we've got one more question here. Somebody's got an indoor grow container being built, and they need financing. Since our consultant who was in the Sewanee County office has left, they still need assistance with the financing. Are you able to assist?
Sure. As a capital access consultant here, I'm kind of available to any and all of the businesses that exist within the 18 county area that is under UNF. And so, though I live in St. Augustine, I'm certainly available for any and all clients throughout that network.
Yeah, and I've got your name here for who asked that question, Paige. And since you are an existing client, we can kind of follow up with you directly. And Ed, I can send you that information.
Great.
To follow up with you offline. And we do, at this point in the game, all of our, not all, probably 90% of our appointments are all still being held virtually. So it doesn't really matter where you are geographically within our region. If you're in our 18 county area, you're good to go. So.
Right.
Yep. Okay. And the email for Ed. Ed, if you want to say your email one more time for folks, and I can also send that out in the follow-up email just so you know, but somebody wanted to verify your email.
Great. E.Dwyer, D-W-Y-E-R, at unf.edu.
Awesome. And I think that's the last question. As I mentioned, everybody on the call today will get a follow-up email with follow-up contact information on how you can make a one-on-one appointment with us and kind of get the ball rolling as it pertains to your own business. So
right. And perhaps, you know, all of you know other people who might be in business. Spread the word. Again, so through PPP and so forth, it's been, you know, kind of almost frustrating to some degree that some people didn't know that we existed, could have reached out to us, and could have had a much higher likelihood of being able to receive the proper funds they were eligible for. And so help us spread the word, and happy to talk to any of you and other contacts you may have to send our way. Thank you all. It was wonderful being with you today.
Awesome. Thank you, Ed, for a fabulous presentation. We appreciate your knowledge and expertise. Everybody else will be in touch with you, and have a good rest of the day. Thank you.
Thanks, everyone.
Bye.